Hey guys, what's going on? It's Rekt Capital and welcome back to the channel. Thank you so much for joining me in today's video about the Pi Cycle Top Indicator, specifically the Pi Cycle Top Moving Average, which will be figuring as a potential resistance going forward on this Bitcoin recovery, which could reject price quite significantly if we see that confluence with the bottom of the distribution range through the Wyckoff lens as well. Subscribe to the channel for more videos like this in the future, and let's dive right in. So very briefly, comparing the 2013 cycle with this cycle, you will notice that in an earlier video, I spoke about the similarities being through the lens of the 50-week exponential moving average in the context of Bitcoin logarithmic growth curves, but also in the context of Pi cycle tops, because you can see here the 111-day moving average, the orange moving average, crossed over this moving average, the 350 times 2 moving average, to note out a peak for Bitcoin's price action. But you can also notice that this was in fact a mid-cycle correction, and this Pi cycle top crossed over these Pi cycle top moving averages and then crossed back down, and then crossed over again once we saw a recovery from that mid-cycle correction to form that second peak. So effectively, this was the first rally in the cycle and this was the second rally in the cycle. So this Pi cycle top doesn't have to be definitive, and mid-cycle correction 2013 is a great example of that, because if we're seeing many different similarities between 2021 and 2013, we're also seeing a cycle top here, but we're also seeing many signs of this being a mid-cycle correction as well, because this wasn't your picture-perfect crossover. If you look at previous crossovers, you tend to see this orange moving average deviate from the green one. Sometimes, imperceptibly so. There is a bit of a deviation here, you can see. And sometimes that difference is even more sizable, these moving averages being quite wide from one another here as well, to just form that Pi cycle top. But in 2021, this crossover, crossover is a big word for this potential, for this crossover. This was pretty much alignment of the moving averages, so no real crossover has happened. I mean, it is a nuanced one, and I'll show you what I mean by that. In any case, we're seeing many different mid-cycle similarities, and the Pi cycle top indicator adds another layer of confluence, cross-indicator confluence, to those similarities. One of those similarities, of course, being the 50-week moving average. You can see right over here that in mid-2013, we saw price maintain the 50-week moving average really nicely as a support, and that's what needs to happen for a bull market to continue, because losing it, of course, means that we see further downside. Losing this 50-week exponential moving average has preceded significant downside, and this is actually a chart that I made in May 31st, so almost a month ago. But we're still at this 50-week moving average. At the time, it was 37K. Now we're at 34K, still at that 50-week exponential moving average. But also, if you look at the mid-cycle correction here in 2013 through the lens of the Bitcoin logarithmic growth curves, in 2013, we rejected from this orange Fibonacci resistance. In 2021, we rejected from this orange Fibonacci resistance. Here in the black level, the midpoint right over here, this logarithmic channel midpoint was lost as a support. And right over here, we lost this black level as a support, the midpoint as well. We lost it as a support. And over here, this yellow Fibonacci has been figuring as a support despite wicking towards the downside. And now we're in that process where we're wicking below the Fibonacci support towards the downside, and we're trying to maintain, we're trying to reclaim this Fibonacci support and hold it. But we're, of course, in the process of wicking towards the downside, and now we're going to try and close above this level. And of course, this is the monthly time frame, so we still have time to reclaim this Fibonacci level. We're on the cusp of doing so. So many similarities. But the Pi cycle top, of course, is also one of those similarities. And I just want to mention that this 111-day moving average here has been declining quite steadily since my last video about the Pi cycle top. When I made the video, we were at around $50,000, $51,000, right around here, for instance. So we've declined by $2,000 over the course of the previous few weeks because Bitcoin's price action was at these low levels, just consolidating here, maintaining them, even wicking down towards the downside, fake breakdowns really towards the downside here, further dragging down this moving average for the Pi cycle moving average. So one of the answers to today's question in this YouTube video is, where will the next Bitcoin peak occur on this recovery from Bitcoin? So if Bitcoin were to rally towards the upside, we have to bear in mind the macro distribution range, the bottom of the macro distribution range. So this is something I speak about in a previous video, so feel free to check that one out as well. I will link it in the top right hand corner, because this bottom of the macro distribution range through the Wyckoff view, we need to test this one. And if we reject from here harshly, then that will effectively carry on this macro distribution and Bitcoin would enter phase E. But only once we reject harshly from here, or even if we just lose this wedging structure altogether, right? Because we're in this wedging structure, lower highs and lower lows, right? And lower highs, lower lows. So the two scenarios for Bitcoin entering phase E is by harshly rejecting from the bottom of the distribution range, which is where this lower high, lower low wedging channel should have been formed in the first place, just below this bottom macro distribution range. But we got that wedging structure formed a little bit lower than that, but losing this wedging structure, phase E, rejecting from the bottom of the macro distribution range, phase E also, most likely. But the bottom of this macro distribution range is 45 to 43 for Bitcoin, whereas the Pi cycle resistance is 49. Could we see a scenario where the Pi cycle moving average aligns and finds confluence with this area, with the 45-43 area? Could the Pi cycle moving average really decline by, $4,000, $5,000, $6,000 in the next few weeks? Depending on how strong this recovery will be, whether that recovery will at least come at all. Let's assume there will be a recovery. If we do see a breakout towards the upside, if it happens today, then no, we won't see that confluence between this moving average resistance and this bottom macro distribution range. We won't see confluence then. But if we do see confluence, then that's going to be a major resistance to break past, because that's going to be quite difficult to break past a confluent resistance area like that, where we see the bottom of the macro distribution range be a resistance in of itself, but also find confluence with this moving average resistance as well. But the likely scenario is that we're not going to see this moving average decline that steeply over the coming weeks, because remember, this is a moving average that takes into account the past 111 days of price action. So we'd have to be at these lows or even lower to see such a drastic pullback in this moving average resistance, which brings me to my next point. This is what I consider to be the more likely scenario. And I'm just going to break this down piece by piece for you. So the wedging structure, let's assume we break out from there. We're going to rally towards this area. This is really a key area to just invalidate the macro distribution schematic, because if we break back into the range, then this schematic is invalidated, which is great because that could give us some more confidence that we're not going to go as low as this phase E could suggest to us. But until this schematic is invalidated, you can't really throw out a potential phase E taking place, right? Because if it's not invalidated, then we can't fully, with full confidence, just throw the schematic out the window. But until we have this situation where we're in this wedging structure below the range and we haven't yet tapped this area. We can't get rid of the Wyckoff distribution schematic, but once we break back into the range, like Bitcoin tends to do historically, because Bitcoin tends to form Wyckoff distribution ranges at local tops, not bull market tops, and there's a big difference there. If we see history repeat with a break back into the range to invalidate this distribution range, then that Wyckoff distribution range schematic goes out the window. But at the same time, that doesn't necessarily mean that we'll be over with this mid-cycle correction, because we have this diagonal resistance. This diagonal resistance, trendline resistance, is probably going to figure as a resistance. And notice the number on this resistance, 48,000. So if we get a breakout over the coming days, maybe in the next week or two or even 3, 48,000 is probably where Bitcoin would rally. Of course, it could take some time. So let's say we break out towards here, 48,000 is going to be a resistance to watch out for. And can't you see that confluence? It's pretty picture perfect. By the time we break out and break past that bottom of the distribution range, the moving average should be able to decline by a few $100. Let's say max 1,000, but $900 roughly speaking. Very doable, quite likely, and it's important to watch out for this moving average as a resistance overall, because in previous cycles, this is a level that tends to plague Bitcoin. So for instance, after this pi cycle top here in 2017, I believe, that's right, we see a moving average resistance plague Bitcoin here, rejecting it. Here we see a fake out beyond the resistance, and even here as well, but we don't see a fake out here. It's a breakdown from a long consolidation range. In any case, resistance, rejecting price. That's how, this is probably the best example of this moving average figuring as a resistance, because in previous cycles, when we got this second pi cycle top in the 2013 bull market, you can see that yes, it is a resistance, but more often a failed support. It can't hold above this resistance and claim it as a support, but then you see resistance here, rejection, and then we begin a new bull market by trying to establish a accumulation range here. But in any case, that's why I'm mentioning this moving average. The 111 moving average is an important resistance to just focus on. And it's likely that it's going to be a resistance going forward here for Bitcoin. And it's going to be confluent with this diagonal trendline resistance right over here, even if we break past this macro distribution range. Because if we break past here, it invalidates this schematic, which is great. But the other thing to bear in mind is that we'd have a trendline resistance that would be confluent with this pi cycle top moving average, which would probably reject price, or even if we peak beyond it briefly and then lose it as we have in the past, but we'd see some recovery, we'd see already some progression, right? Because breaking down from this distribution range is bearish, but invalidating this distribution range is a really good sign, even if we were to reject from this pi cycle top moving average and this trendline resistance anyway. So there is still progress there. And that doesn't mean we're in a bear market necessarily. We're making progress and we're still in a corrective period, but that doesn't mean that we're going to see significant downside once we've broken back into this range to invalidate a scenario that is effectively screaming to us that we're going to see phase E and a really strong correction towards the downside still yet ahead. So invalidating a bearish scenario that is the Wyckoff distribution range to just rally towards this trend line and this pi cycle top moving average resistance, that's still progress, that's still positive, and it would still mean that we're in a mid-cycle correction, but that we're already making some waves, we're already making some progress towards potentially trying to end it. This is going to be a resistance to watch out for once we break past this area. And that's not even a given that we break past this area, but I'm just talking about scenarios and the next resistance area to watch out for, because that would probably be the next top in this recovery, but not necessarily the bull market top, because we're still in a period which is very, very, very similar to the mid-cycle correction of 2013. Those similarities really run deep from the 50-week moving average, exponential moving average, to the Bitcoin logarithmic growth curves, to the pi cycle top indicator as well. In any case, I hope you found this useful. I hope you found this video educational. Leave a like if you did. Subscribe to the channel for more videos like this in the future. Thank you so much for watching today. I'm Rekt Capital, and I'll speak to you in the next one.